Hey everybody, doing an update, seeing how the markets are reacting, what people are saying about COVID. It's been a long journey. Feels like 500 years. The S&P 500 over the past couple years will show the significant dip in March 2020, followed by a very steady rebound. Yet COVID is still very much in the news, and some, like this guy, uh, suggests that Fed tapering its uh, purchase of instruments combined with inflation is the kind of a worst case scenario for the market. Um, Interestingly, this individual thinks that it's still going to be okay for a quarter and suggests that in the fourth quarter they're still bullish because any dips are going to be bought, but he thinks that the Fed has delayed the tightening process, which means they're going to have to accelerate it, and he's looking at 2022 of a healthy 10 to 15% correction. Um, it's interesting though, because you see this sort of correction back here that was just really erased 5 months later. So yeah, maybe not a concern for the long-term investor. Talks about the growth rate. Um, Pretty interesting piece. Um, Market Watch is just commenting in the U.S. we've hit 750,000 deaths, and vaccinations for 5 to 11-year-olds were finally approved. And we come over here. This is this is where the daily deaths for the country. So here we were back in March, slump coming up through the holidays. Uh, Vaccines start becoming readily available, and so much wanted to think that we were out of it and that was done, but there were a number of people who chose not to get vaccinated, and schools reopened, so um, that was responsible probably for this bump, uh, but hopefully we're going to see our way through it. However, the economic effects of COVID, I think, are still being discovered. Um, Seeking Alpha actually usually has quite a few pieces. I had to dig for this one, um, and when you click on it, it's just talking about a few markets for the day, um, and blaming it on a COVID outbreak. So not a major piece there, but I thought that this was interesting. Um, and that is suggesting the market is undergoing a slow motion deterioration with pockets of shares down 20% or more. So the S&P 500, right, as we've just seen, is not too bad. Um, and the Dow is similar looking, but when you come into these mid cap and these smaller cap companies, you've got a higher percentage of stocks that are down 20% or more from their 52-week high. Um, and in addition to conversations about inflation, we're also seeing a lot in the news about um, su- supply chain problems. And um, over here, I've been to Southern California and seen all the containers, right? The containers, um, Now it's talking about the boats, not the containers. If they were end to end, they would stretch all the way to Chicago. Um, and that's why, contributing to the supply problem that, the goods are there, they're offshore. Um, there's a lot of finger pointing with the dock workers who, are slow and overpaid. Um, and you come down to the Fox News perspective, it's all Biden. He's restricting U.S. production and driving inflation. Um, and it's interesting to see how true this was in regards to production, and found this chart of inventories, U.S. business inventories. So you can
I'm not a
see
coach, but I invested in Invesco QQQ, which
it's
gives me access
really
to next-gen statistical analysis software.
largely
Become an
recovered.
agent of innovation with Invesco QQQ.
So that is the update from now. We will keep an eye on inflation that has at least partially been driven by supply chain bottlenecks, um, the money floating around in the system, um, which were COVID driven, and yeah, the impact on the market we're still yet to see. They keep reporting about it, so we'll keep seeing who's right and who's wrong. Bye for now.